All right. Welcome, everyone. Welcome to our webinar on becoming a category king and queen. I've got an amazing guest with me today. My name is Pablo Troncoso. I'm the director of training for Sales Boomerang. And here's the deal. We're gonna discuss the topics of sales, marketing, branding, all in the mortgage space. And if you want to know if you're doing it right, the best way to find out is typically to ask someone who is doing it right. And again, we happen to have one of those category queens with us today, and it's just our luck that we'll have the next 45, 60 minutes or so, and we'll really dive into that. So throughout, I just want to let you know, I'll be asking, what have you learned and what do you love? Okay, what have you learned? What have you loved? That and to drop that into the chat. We've got our good friend Richard over in our marketing department. He'll be monitoring that, so please drop those in. But let me share a little bit about our guest, our amazing guest, Christine. Christine, are you with me?
I'm here. Hi, everyone.
She is amazing. Hi. All right, listen, here's the deal. Christine's been in the business. It's a 30+ year veteran, mortgage industry, right? She's held positions ranking from originator all the way to senior VP of sales. And in her 30 years, she was corporate oversight for 2 national firms in originations and business development, spanning marketing, financial forensics, and all areas of sales leadership, including one of my favorites, training and curriculum. Christine has won numerous industry awards and appeared on many finance industry magazines. And today, as a 4-time best-selling author, Christine, I actually have your books that you sent me, but I literally just moved it and I was ripping open boxes today trying to find it. Could not find them, but anyway, thank you so much for that. And I didn't finish your bio. There's so much more. I actually just want to get right into it. There's a story that's really going to kind of help kind of context, put some context around your journey, and I think is really going to help people understand some shifts and some differentiators in order to become a category king and queen. Can you share your story about your H&R Block mortgage division journey?
Yeah. So, well, first of all, thank you for having me here on the show. I love Sales Boomerang. And I love all you guys that are here. You've been fantastic to me. I hope I'm fantastic for you. And it's just such an honor to be a guest. So thank you for that. So H&R Block took up a 12-year chunk in the 33-year story. I would actually, their company acquired a company that I was at, and it started out from a place where I had to interview, kind of almost, try to win a spot or a seat at the table by doing a presentation and explaining why my branch, my area. I was an area manager for my previous regional Northeast company. And so I did that, and I was one of the fortunate ones. I will tell you that I won that seat because I had a B paper territory and my margins were thick. And so I led my presentation from a profit standpoint. And so I was competitive volume wise. I didn't have the most tenure. So the journey starts there, and I'll just fast forward this Cliff Note version. I remained, I started as one of the first 28 branches of the national, what would become H&R Block Mortgage. So it's kind of a best kept secret because H&R Block, had this mortgage division all this time, and people didn't think of them as having mortgage, but they started acquiring companies, and we grew over a period of 5 or 6 years. I threw my hat into the ring to become a district manager, and would win that opportunity in the Boston market, which is where my own territory was. So it was great. And I took that district that I took over, which was about 125 loan originators, from last place in the country of districts. There were 14 major market districts, to first place in 16 months. And then I held them there for 3 years. And during that time, I was promoted to regional vice president in the Northeast. I got Chicago, Denver, Colorado. It was kind of a weird formatting for the US, but I got that region, did really well, stayed profitable. And then I became their senior vice president of sales in the end, over 900 originators and 210 branch managers, and those other 14 guys that I was peers with as district manager. So that story would be a happy ending based on what I just told you. But that timing went into 2006 and 2007.
Mhm.
And I was ultimately at the table where the decisions were made to close that entire division down to save shareholder price on Wall Street because they were publicly traded Fortune 500 company. We did that. We kept that company in the black. We didn't have $1 of shareholder loss, but it put me out of work.
Mhm.
That's the whole story.
Yeah. So whether you're on this call and you're a big bank, a big mortgage company, or you're a smaller company, and again, it really doesn't matter. I think there's plenty of lessons there, Christine. Um, and now today, you're running one of the like biggest up and coming companies, if not what I heard is the largest consulting firm in the U.S. banking and brokering industry, called 2020 Vision for Success, right? So talk to me about that, and then I want to jump into questions about,
Yeah.
okay, what do we need to be doing to be a company that has 2020 vision moving forward? Because I feel like there's a lot of blurriness going on, and
Yeah.
we don't want to hit something head on. So how did you go into that industry?
Yeah, so in between the ending of that story and me starting 2020, I worked for Annie Mac Home Mortgage for 12 years. And so when I left the H&R Block, I took about 50 guys with me from the local market area. And within 60 to 90 days, Joe Penabianco and Ryan Cuby called me. I had worked with Ryan at H&R Block, and they were beginning to grow their Village Home Mortgage, which was the previous name to Annie Mac. And so they flew out to Boston. We had steak dinner a couple times. And Joe challenged me to broker the sale of the company I was at, Integra, to Joe. And I did that with Joe successfully. And then we began Annie Mac. And so Annie Mac celebrating their 10th year this year, but I was with them for 12 years before I left, and it would be 14 this year. And I left behind a branch that is actually managed by my boyfriend of 14 years in the Waltham market at Annie Mac. So,
Mhm.
and I was their national manager there over sales, partnered over sales there and real estate. And so that was an incredible journey. And that company grew, gosh, to, I think they're 8 billion today. So, another incredible ride. But somewhere along that way, I wrote a book between the two jobs. I had the summer off in 2007, and I wrote Wise Eyes, and it kind of sat on a shelf. And in the years that wore on at Annie Mac, I just, as you do, because you can appreciate this if anybody's listening that is 50 or older, we get wise and we start to figure our why out, and we start to realize that we need to do legacy work. And those things came into focus for me. And I felt this pull towards writing and teaching and all of these things. And so I had an incredible career. I was in good standing with Annie Mac. And I kind of felt like I'm going to do the Seinfeld thing, and I'm going to leave while I'm still popular. I'm still liked by the people here. I'm not going to fizzle out. And I'm going to go do something I really love and have a passion for. I had hired my competition over the years, almost all of them. And I would call them all friends, by the way. And I think they're brilliant minds and service hearts. And I, at the same time, strategically knew what they did. And I knew that I could come and do something maybe a little different than they were doing to create a niche here at 2020. And that's what I did. And in 2018, I was lucky because I asked Joe if I could serve a 1-year notice as an executive at Annie Mac while building behind the scenes and getting ready to open our doors in November of 18. And he allowed those two things to happen in tandem for me to serve out my final year and for me to also work on the building of 2020. So I hit the ground, like I stopped working at Annie Mac on a Friday and I opened up my doors on a Monday with 2020.
All right. Well, listen, you just came off of an incredible summit down in Florida, right? Our CEO Alex Kasissian was down there, and sharing that stage that you so graciously hosted to an incredible team of leaders in the mortgage industry. people are asking, people want to know, right? Like, what are the common themes or the common threads of the teams that are going to crush it in 2021? And the follow-up question to that is the answer going to be the same for those same companies in 2022, or is that going to change?
Yeah.
Can you speak to that a little bit?
Yeah. So I mean, anybody that has sat with me for more than 5 minutes or sits inside our consulting firm, we are built, we have 46 employees here, and we have a big focus on economics and financial forensics. So our company is positioned to help large organizations all the way down to independent broker shops, or even the individual originator, build a thriving business. It's a business school. We are a business school in the mortgage industry, and we have enormous resources under our roof. So it won't surprise you that, yes, we are giving advice this year, and we are seeing people take some really smart moves. So I'm going to give this directly away to the audience right now and tell you, when you look at the market today, what I see is companies positioning themselves, first of all, calming the panic that may be rising at originator and ownership seats, where they see volume declining right now. And they're kind of looking at things like, oh man, are we about to, have this environment where there isn't going to be a lot of business? That's actually not the truth. There's tons of business to be had. It's where you're fishing. And so there's a little bit of a pivot. So people love to compare. I think everybody loves to compare past markets. And so, when pandemic was happening and the feds were bringing the rates down to zero, and there was some volatility, and then you had the forbearance atmosphere, you had this perfect storm that was brewing, where people started talking about '07, and the two markets could not be more different. One had a supply and demand issue, and one did not. One had a rising default ratio issue, and one does not. And so those are two completely different markets. We're in a great market here, but you have to be intelligent enough this year to realize where you're going to toot your marketing horns. And so I'll unpack that if I have just a couple of minutes kind of.
Yeah, please do. Please do,
Okay.
Christine. We're heading in the right direction for sure.
All right, good. So here's the thing. We forget sometimes as mortgage professionals that we are an extension of Wall Street, right? We are fronting an American asset. It is an asset vehicle. It is tied to the 10-year treasury, which is the 30-year fixed interest rate. And because of that, we kind of stay out of the weeds of, giving a lot of day-to-day economic advice. And we leave those to the experts, rightfully so, like the Barry Habibs and the sales boomerangs and the housing wires and all the magazines and all of those people to say what's what. But here's what we do know, and we should be comfortable saying this year. If you have a home that you own, you have an asset that is worth more in 2021 than it's been worth. It may be worth a whole lot more than it was worth 12 months ago. And so what does that mean? Well, if we were selling, let's say, Dunkin' Donuts stock, and it was worth $50, and we were a broker, and one day it was worth 100, and it had never been 100, or not in a very long time, in a decade or 2 decades, we would be saying, sell your Dunkin' Donuts stock and go and cash in on this asset. So this year, as mortgage pros, we should be saying those things to people that are sitting on the American home right now. There is a ton that can be done with the equity that is in the homes. And so here's what I see, though. I see a lot of originators that are still bringing first-time home buyers to their realtors. And they're saying, here's, Tom and Sue, and they're pre-qualified. And that's great. That's been great. Bringing people to your realtors have been great for a long time. But I want you to realize this year, if you do that, you are bringing more mouths to a table where there is not enough food already. So the better proposition for your realtors and your realtor relationships this year would be to help them get some bread for the table. And what that looks like is, let's go fishing for our realtors and find those people that were thinking of selling. Maybe they sat on their home because of pandemic. It was their shelter. They weren't going to get rid of their kids' school and their home, where they work. And so 2 things there. Number 1, run campaigns. Why are the reasons I would refinance this year for higher interest rate? Call me today and ask me why. Why would you run an ad like that? Because you're helping solve to the embarrassment of any person who lost a job in the last year, who would have to take a higher interest rate to grab the equity, who thinks that might be stupid. And you're going to tell them why, a 1% higher interest rate would save them a ton of money. There's intriguing headlines that you can create through your
Right.
marketing that will bring call to action in. And these are not bait and switch ads, guys. These are truthful, financially sound advice about the vehicle that is their asset. Who are the people that have kids that are in the 8th and 9th grade who they need to send to college in 3 years and don't have their college savings saved yet? Think about the millions of things that you could be doing with those assets. So a little bit of pivoting. The other part is, let's go get those people that are going to list their home. Let's go bring those people that need to list their home to a qualified realtor that's in our network and connect those dots and bring bread to the table. And we're going to get deals out of those transactions. We're probably going to pick up the buy side deal for the person selling. And then we're also going to get reciprocation, obviously, because of bringing that type of sale to the realtor.
I love that. That is right in line with the conversation, and shamelessly plugging our own some of the alerts that we deliver, right? These equity alerts, either the equity alerts or the prescriptive scenarios that we provide to our clients. Christine, it gives the opportunity to open up that conversation where I'm going to bring bread to that table, right? If I know you have equity, because here's the thing, I just sold my home. I did not know I had nearly as much equity. I had a completely different agenda. It wasn't to cash out an asset, right? It was, I needed to move. I was a growing family. So I immediately think, Christine, how many people are out there that are in that situation? They're not following the market. They're not following, the valuations of homes in their community. They need to go to the next step in life.
Right.
And if you can be the right one that's showing up and now bring that opportunity in, I think that's a great way to do that. And by the way, again, with our equity alerts and our prescriptive scenario alerts, which are all driven by one of the best, pieces of news and information, good news that you can deliver, that you've got equity and here's a great reason to use it.
Yeah.
That is right in alignment with what we're talking about. So with that said, Christine, it sounded like, because we're in this conversation now, so I want to know, like, what are some of the things, without giving away, like, listen, my wife's a great chef. She loves to share the food, but she doesn't necessarily give away the recipe, right? So
Yeah.
I'm okay with you doing that. But what are some of the things that executives can be doing to prepare themselves during these times? And even marketing departments, what do they need to be doing now? Because you started to touch on that, but I'd love to dive in a little bit more.
I mean, we have to educate, the homeowner, the American homeowner, what they're sitting on. I don't think most people, you just said it, like, you didn't know how much equity you had in your home. I don't think, many people, I think people know they have equity in their home right now. I don't think 3 months ago they may have realized it. And I think, the whole argument of whether we're in a bubble or not in a bubble is yet to be proven. And I'm going to guess that there's going to be new appraisal or regulatory guidelines put in place that protect all of us from over lending in these inflated value situations.
Right.
We're watching that, but we have to get out there and explain to people that are owning a home, how they can leverage this equity for financial gain. So many times we sit on our home and the only two things we think of that we're ever going to do financially with our home is sell it or refinance it. And so maybe we're going to take a second loan. Maybe we're going to take an equity loan when we want to do home improvement. Maybe if we think we have equity down the road, we might think of getting some cash out. But a lot of times, if we just refied, like we may have last year, into this low interest rate, a lot of people lowered their term, in fact, and took advantage of that. But there's reasons, if you would expand a term, there are reasons that you would liquidate that asset to its highest level. I will tell you, from a financial advisor standpoint, you are going to hear financial advisors tell you to maximize your mortgage for the tax deduction. The wealthiest people in the world do not write cash checks. I want to just debunk this myth of cash buying. It is not a wealthy man's proposition, at least not a smart wealthy man's proposition. Really,
Leverage. It's leverage, right?
That's exactly right. And so I don't think the average American homeowner would would go to their wife or to their husband and say, honey, I think we should increase our interest rate on our mortgage, when their only focus last year was to get the best interest rate they could. I think that's a tough conversation for a homeowner to have. However, if we start that dialogue and our advertising says, let me tell you why it's brilliant this year to go up in interest rate and grab equity for financial saving, call me today and I'll tell you why, or call me today for a free analysis.
That's so good.
It at least begins the conversation from a standpoint where you say, oh, I'm not stupid to talk to my mortgage guy or girl about my mortgage. And so you want to start that discussion. And I know people are going to say, well, what's your interest rate for the start of the conversation?
Sure.
And I think the conversation has to be, well, do you have equity in your home? Let's examine that. And then let's look at your whole financial portfolio and let's see where it would make financial sense for you to do this. Now, objections I get from originators when we're talking about things like this will sometimes be that they'll project what the client's objections sometimes are, which are, I shorten my term, I don't want to have a longer mortgage. Well, term only matters in your mortgage if you're not properly protected. So financial advising is going to tell you to have a term life policy that covers your debt. So if you have $1 million home and you don't have $1 million term life policy to pay that off, then you're exposed, and your term does play a big part. But it doesn't matter if you have a 10, 15, 20, 25, or 30-year mortgage if you have $1 million term life policy, because it's going to get paid. That debt's going to get paid. What matters is your liquidity. So what position are you in with the most expendable cash for investment? And if you can't get to liquidity, high liquidity, because you got to a 10-year mortgage or you took a 20-year mortgage and now you're paying a really big mortgage payment, you did get the lower interest rate, but you would benefit if you went back to a 30-year, raise your interest rate a little, grab $50,000 consolidated debt, got a couple $1,000s a month in savings, put some money away, invested some of that in your kid's college 203B, and you end up with a more affordable mortgage. You buy a life insurance policy for a couple $100 a month, and you are now properly leveraged in all directions. But the average American does not, and this is not an insult, they just are not thinking in those terms right now. And so that is where the market's brought us. We represent the market. We are Wall Street brokers of this vehicle. And that's the discussion. That's where all of everybody's marketing needs to start.
Right.
The discussion. Yeah.
So, and I love this. So anyone that's listening, I talk to, lenders all the time, and so many now. And I love the fact that I'm hearing so many lenders are saying, hey, listen, we want to be a holistic approach, financial, kind of consultant to our clients, right? We don't just want to be the order taker when it comes to mortgages. I think that's fantastic, as a business model, with what you're talking to now. So if we can open up these conversations now, we have these tidbits of value that we can add where maybe somebody is not even thinking about that, right? One of the things we talk about is don't pretend your clients know what equity is, even though you might have talked them blue in the face last time. Explain what it is and how it can help them. Now, all of a sudden, I can take that equity leverage conversation. I can give you specifics of how it can be essential to you, Christine. But how as lenders can we actually start that conversation, right? Like maybe talk to me a little bit about content or marketing. This is something I've seen you do so well in your business. Can you share some of that and how some of these marketing departments can actually start to have that touch point with clients, whether it's past clients or even new clients?
Yeah, I really think if you sat down in sales teams and marketing teams right now and you strategized, 10 or 20 titles, just one-liner words, that a single sentence headline with a good, strong call to action and a nice image, in the background, it's, call us today for your free consultation. Ask us why homeowners are racing to financially gain this year with their mortgage. But it's, I'm not the person that writes my own marketing. So I will tell you, I am great with ideas, but having marketing teams and having people that you can say, this is what I need. I need people to call me because they're sitting on the powder keg of financial gain. They have savings they're sitting on. They all have abilities to leverage themselves this year. And that may change. And so, you want to be in a position where you're covered and insured, but you just have to have a marketing campaign. I would be running something, and this is based on my own social media knowledge of, what works through our digital domination courses. You've got to have 3 to 5 active marketing pieces going out a week at least, just because all the algorithms demand that activity level to even give you the type of coverage that you want on social media. So you need a lot. You need to, you should have a campaign that's running for the next 90 days, 3 to 5 times a week. It's okay to have a single piece of marketing that is run 5 or 10 times over a 90-day period, because think of it like a commercial on television. Everybody isn't sitting in front of the television 24/7. So you're going to see it once out of the 10 times it plays. That's how it works with your audience too. We have this false perception that we're, horrifying all our friends and family because we're running, ads. And I guess I would just tell you that you've got to get in the social media marketing game, in order to believe that that's the space that you need to run commercials with a strong call to action. So I would help our realtors with this too, by the way. Like I would be putting on educational webinars and really helping find those people that need to sell their home. There is a tipping point that's going to occur in June. The statistics showed that for the first time in a year, we had the highest percentage of American inventory come on for sale. And there's 2 reasons that happened. Number one, just people finally are getting out of pandemic and they're less afraid to leave their shelter. And then number 2, the forbearance is starting to be processed. And the foreclosure properties are starting to come down. We were at 14-15%, which is extraordinarily high. And that has started to come down a little bit. So.
That is great. Listen, Christine, I'm going to ask everyone. I told you at the beginning, I'd say this in the chat.
Yeah.
What have you learned so far, right? And what do you love? What have you heard that you've learned? And what do you love? Drop that into the chat. Tony, thanks so much for tuning in and dropping your thoughts. Right? He says essentially the homeowners, American homeowners, essentially traded their very bad debt that they are already in for not so bad debt, which is mortgage debt. That is also tax deductible. So, and Tony's got a real positive attitude, having been through many cycles, right? Which we talked about, right? So regardless of where we're at, but it's hard if you're somebody that's maybe only been in the business 5 years, which 5 years can still be a very long time. You can have a lot of success in a short period of time in this industry. You might not be accustomed to the full cycle, right? If you haven't gone through it fully or started right in the middle or at the, at the top of a peak. Let me see here. Beth asks, do you get a lot of unsubscribes with that amount of emails?
So that's not emails, that's social media posts. So it's not CRM. And so I would bet you probably would, Beth, if you sent out emails, but I'm talking about your social media. For me, so the question might be converted to, you get a lot of people that unfriend you or unconnect you with that amount of social media. I would tell you that since we began posting 3 to 5 times a week, we've gone from 10,000 followers to over 100,000 followers. The moment we began to really appear as a real official media outlet that was putting regular stuff out, we attracted people to join us for information. Right. So the opposite effect.
I love that. And I think I've heard this from Donald Miller when it comes to marketing. He says marketing is attracting who you want and pushing away who you don't want. And that's okay. So if someone's, unliking you or unfollowing you or unsubscribing, chances are that wasn't the person you were meant to serve. So again, that's a great question. Let me see here. So some wins, some learns and some loves. Dick Coder says pivot and help realtors fish. I do like that one, right? Stacy Lamonaco says, I love that being transparent about raising their interest rate to help their financial situation. Yep. I feel that they come in into the conversation already knowing that it could be a higher rate, right? Hey, everyone's telling you do this.
Yep.
I'm saying do this, right? And I think it's okay if you're the one that's willing to show them a different light. And so that's awesome. Who else? Beth says, thanks for clarifying that with the emails. Okay, so I've got so many questions I want to ask you, Christine. By the way, I met Christine 2 years ago at a Housing Wire Engage seminar right before we went into lockdown. And it's funny, as we reconnected recently, and so I want to stick on this conversation, this topic of messaging, okay? Because we get this a lot from folks where they're getting alerts, they're getting alerted of someone that's in their database that might be in the market, or they're getting alert of someone that it was a new lead maybe a month ago. I'm a big fan, obviously, of picking up the phone, right? I was in the business like 15 years ago, and picking up the phone was a way to make it happen. But now there's this whole thing of like text messaging and automated. And before we talk about automated, you and I had a really interesting way of reconnecting.
Yeah.
Right. I sent you a text message because I had your number when we had originally met, and you responded in a way that like no one else that I can remember in a long time has responded. You sent me an audio note right to my phone. I listened to it. It was hilarious because you had no idea who I was. You asked me if I was somebody else. That's okay. I thought that was hilarious. So I said, nope, try again. So we had a little bit of fun back and forth. But the point is that when we finally connected, it was like 2 years was 2 days.
Yeah.
Can you talk, is that something that you're using in your communication system, or is that just a way that, talk to us about that?
Yeah, no, I mean, I certify in time management. So you might imagine during the day, I compartmentalize myself so I can be extremely focused in the thing and present in what I'm doing. And we have, nearly 1,000 clients today, which I'm grateful for, knock on wood.
Awesome.
And those, that creates a lot of traffic of communication. And then of course, there's a lot of people here to catch us. So how do you like speed to respond? When do you respond? So I respond to all my email in pockets in the morning, midday, and late day. And then I'm in meetings and doing things like I'm doing with you guys right now. And I'm very focused and present, and I'm calm. And I still think I give platinum service because nobody goes a long period of time without a response. And by the way, if you're responding to everything in seconds, you're killing yourself and you're setting a precedent that you'll never live up to for the rest of your life unless you just never leave your desk. And it's just a horrible thing. You have to let that out a little bit, be controlled, have some traffic control. Yes, I will answer immediately as quickly as can, because I can't get into a meeting with the person inquiring, but I can say, hey, I got this. Thanks. And an audio message for me is a super quick way when I'm doing other things to respond to somebody inquiring. I knew you were somebody that knew me. I knew I must know you, even though your number wasn't appearing. And so then began the dance, and we were quick. And I think we accomplished a lot in like a 5-minute back and forth audio exchange. And then we were like at a results place, never had to get on a phone call, didn't have to schedule anything else into our schedule, and just kept the ball rolling. Right.
Yeah. Yeah. I mean, I love that approach. It was an audio, it was such an up-leveled way to have that fast interaction, right? Sure, a text message can be right there, but man, you can't tell me that you see an audio note in your phone and you're not going to play it. Like, there's no, come on. And then all of a sudden, then you hear it, then that voice comes back. So anyway, so that was really interesting. I want to change up the conversation here a little bit on a different direction. So you've worked with obviously in the mortgage industry for a long time, over 30 years. And we've started to work with banks, right? Like the mortgage division of banks. You even worked with an accounting company, in their mortgage division. What are the smartest kind of banks doing right now in the industry? What are the smartest ones doing right now that maybe is going to separate them from others?
I think they're getting technology minded. And I feel like we've been talking about technology for 2 decades. I have been fortunate enough to be on the technology panel at the MBA for the last 3 years. And so I've been in the room with the biggest techies in the banking industry. I've moderated that panel 2 years in a row. And it's always exciting to see what's coming because they debut what's coming. And so what I see though is that they're going to where the audience is going. So the millennial became the largest buyer in 2019, again in 2020. They went from 29% to 42%. That's huge. Based on their age and their buying power, they're probably going to continue to be the largest buying pool for another 5 years. And then it's hard to even believe, but you've behind them, here comes the Gen Zers, and they're no less technological. By the way, they won't be looking at our ads on Facebook because that's the old fuddy-duddy social media. Sorry, Facebook. But my son's generation, when they begin to buy in 10 years, it's going to be, I don't know how we're going to be interfacing with them, but it's going to be different than it is today. So what I see banks doing is, I think the pandemic pushed us to completely close the e-link on a mortgage finance transaction. There were a lot of banks that were doing, obviously doing their transactions digitally, but we were still finding that not all closings could be done digitally. And so everybody rushed at the beginning of pandemic to close that gap. Everybody got there. And if they didn't, I don't know who they are that didn't get there, because really, like, everybody got there.
Right.
And so I just think that you're going to see that millennial buyers are going to continue to buy homes through their iPhones, looking at realtor.com. We need to appreciate how they operate and who they are. And I think banks are, looking at that. I think that you will continue to see an evolution in how we were before pandemic. We were trending towards the loosening of guidelines from a 10-year-old implosion that we were still healing wounds from.
Mhm.
And so many economists will tell you that what happened during the pandemic, even if you took the pandemic out, we were still in a volatile situation. There was margin calls going on all over the place in February and March last year. And that was because of the sheer amount of volume that was flowing out of all of the institutions. And so I do think the banking industry will remain, very focused on the performance of our loans. I think that I think there's a possibility that we will see loosening of some guidelines in some areas, but I think they're going to stay conservative to the degree that there is still a lot of unknowns. And this last year was a reminder of how unknown our markets can get, and how to react to those. So whenever you have high volumes of money being lended at a greater percentage, I use this metaphor. If our kids were coming to us for lunch money every week and we knew it was $25, and then one day they came and said, I want $100 for lunch, we would ask why. We would say,
Mhm.
why do you need, it's been 25 every week for forever. And if they convinced us to give them this $100, we would probably want to be sure that it was being spent on lunch. And so I use
So
this,
good.
I just use this metaphor, which is so, silly, to remind us that the people writing our checks are going to remain steadfast, because the entire collapse of the mortgage industry in '07 was the perfect storm that all entities didn't see coming.
Mhm.
Mortgage insurance companies were desecrated, and so we're somewhere between where we were and where I think we're going. But I think last year shook our foundation. So I think you'll see them looking out. You'll see them looking out. You'll see them reaching. Um, I wouldn't be surprised if you saw some new fandangled product come out if we can stay stable in the
Mm.
next 6 to 12 months. So we'll see what that looks like.
Can you talk to me the difference about messaging and what you're discussing, right? And especially to like different generations,
Sure.
the difference between marketing and branding, if you can, for a few minutes,
Yeah.
and what we should be doing, right? If we want the attention of those right customers.
Yeah. So we actually teach marketing in 3 segments. And so one of those segments is called Niche Nitrous. Another one's called Marketing Madness. And then we have what we call Super Me, which is branding. And it's really 3 different animals in the barnyard, if you will. completely three different, they're all farm animals, but they're all different things. And so let me unpack what each one is. And they go in this order: niche,
Okay.
nitrous, marketing madness, and then super me. So when you're building a business, and that's essentially what we do, is help people build their businesses. The very first thing, one of the very first things you're going to do after you build a business plan is you're going to come up with a strategic marketing plan. Strategy is about who am I? And so one might argue, well, branding is about who am I too. It is. We'll get to that. But strategic marketing is about who am I? And when I put sales funnels into my organization, what can I create sales with? Where do I want to be placed? So essentially it's, what fishing ponds do I want to drive to? Where do I want to be doing the fishing? And so that's a really important thing. And most companies are going to have what you call champion programs, and then always have some form of a challenger. So the thing that converts for you, maybe it's your database, maybe it's your realtor base. All of you have a champion marketing program that's working really well right now. But what are you doing to challenge that with your second and third sales funnel? And everybody should have 3 sales funnels. And most of us do. We have something that works really well. We have something that kind of works. And we have something that maybe we're testing. But what you want to do is have those sales funnels have a good long amount of time, good amount of investment to really get the ROI that you're looking for. You don't want to plug things in that you can't afford. If you can't afford to do a sales funnel of any kind for 6 to 12 months, I would tell you, don't do it. Don't sign up for the thing you can only afford to do for 30, 60, 90 days. It's not enough time. You're not going to get the return that you need. Longevity comes out of these sales funnels from that. So niche nitrous becomes, where am I putting my efforts on my sales funnel? What is my sales strategy? Marketing madness to us is a class about measurement of your return on investment from marketing dollars spent.
Mhm.
And so where that gets into marketing is, okay, now we have these funnels in place. How are they returning? And I'm going to tell you, this is the place that in our industry, at the desk of our loan originators, and even some companies, there's a lot of area for needed improvement, because we will spend money, but we won't measure necessarily how it returns. Easy when we're buying leads, because those guys have built-in reporting systems. It's much harder if you're doing organic lead growth. I'm calling my past clients. I'm knocking on realtors' doors. I'm stuffing envelopes. I'm sending out a newsletter. I'm doing social media marketing. And so let me tell you a great example of that. Social media marketing is going to give you reports. Facebook, Instagram, they're all going to send you reports, and you're going to get hammered by social analytic people saying, your SEO is not good. Like, you're putting up a post and you're getting like 5 likes. Let me get my hands on your social media and I can do a better job. Well, we defy that reporting analytics, because we have a call to action in our copy. So within the writing of our social media, we say, call us today, email us today, phone us today, message us today. And the thing about that is 90% of the people that do contact us do not drop a like, comment, or share on our posts. And we ask them. So it's totally unanalyzed data. It's coming in, it's monetarily converting. This is Gary Vaynerchuk's $2 a day organic converting methodologies. And so marketing is the second component of marketing is measurement. And so you have to be careful, because if you get sucked into this is what's going to convert, that's how it does convert, you're not converting well by other people's standards that stand to sell you something. You need to know what's converting, how it's converting on an organic and manual level. And finally, the third thing is branding. And that is, what does my image, when you look at 2020 vision, what does my logo represent at this point, 3 years in? Do you recognize it when you see it? Do you affiliate it with what we have underneath the hood? Is it a positive, reflection? Do you see people that are here that, seem to be growing? Does it have vision, vitality, and velocity? That's my TED Talk. Does your branding have those 3 things? Do you look like you're growing? Do you look like you're healthy? And do you look like you're going places? And those are the things that very cliff note of very deep topics in my
Yeah, no, absolutely. And listen, anyone that's been looking for a resource to dial those things in, right? The marketing heads that are on this call, or you're looking to, for that marketing person or resource, Christine's program. I have spoken to, I've read her books, and and I've seen her talks, right? The ones that people pay a lot of money to see and to be at in person. You need to connect with her. We'll talk a little bit more about how they can do that towards the end. I do want, and actually, and I know Richard, our VP of marketing, his head is nodding like 100% on everything you're saying here. He's a marketing expert. I love him too, because he's all about the numbers, right?
Yeah.
Marketing isn't just about throwing a whole bunch of stuff on the wall and seeing what sticks. It is, I need to track it. And if it can't track it, and if I can't do it for a sustained period of time, we're not going to try it. Like, what's the point? You might pilot some things, right? Some fun little projects or things like that. But when you're trying to feed and bring more than bread to the table, it's got to be, you got to be able to measure it long term.
I'll add this one thing. It's a number one
please.
mistake that originators will get a lead program, and it might be projected that they're going to get a 10% conversion. You buy 100 leads, you get 10, submissions out of it. And then obviously we can reverse engineer that down to like closing ratio if we wanted to. But the point being that you may do the lead program and you actually end up with 4% conversion. You get 4 out of 100. And so we say, oh, I want more. I got 4 deals. We look at the 4 deals we got. I want more than that, even though they told you were going to get 10, which would make you examine, by the way, am I doing the most with these leads? Am I calling them fast enough? Am I saying the right things? Am I pulling the trigger when I need to be? Am I discarding them sooner than I should be? But we'll spend more money. Now we go back and we say, give me 200 of those because I want 8.
Right.
When we were told we would get 10, we're only getting 4. And what I would tell you is, if I'm getting an underperforming conversion from something I thought I would make more money in, I would take my money elsewhere and I would find the thing that did give me the conversion. Because here's what we don't equate to when we're looking at conversion is our time. 200 leads is going to take twice as much time. And now what does it really cost you? Because it's not just the money that you write, right?
Right. That's so good. And I guess the other question would be, Christine, on something like that is, essentially, like we started off the call talking about, hey, if you want to know if you're doing it right, ask someone who's doing it right. I've also seen the mistake happen where, and again, I used to buy leads from my company, when I had my own branch, and would invest heavily, and I knew what worked, and when something wasn't, I would always go back to the source, and I would say, and I would ask, what are your best companies doing? Not what is the average?
Yeah.
What are your top people doing, and why? Like, what's the success factor there? So I feel like you would be definitely the right person to talk to about that. So again, what have you learned? What do you love? Before we finish off with kind of the main focus for the second half of this year, and I feel like you've already given us several, but I know with 2020 vision, you want to focus. Before we talk about that, just have one kind of off question, because I know there's that we've got a lot of different business mortgage types that are on this call. So we're watching the Olympics, right? There's gold, silver, bronze, and not that anyone's going to finish on a podium per se, but when it comes to consumer direct, retail, and wholesale, who's going to finish gold, silver, bronze? Like, how do you kind of see who's going to like really crush it this year, maybe moving into next year, and maybe even any thoughts around that? Love to hear your take.
Oh my God, you'd be killing my company if you really made me answer this question and weighing it in. I'm only kidding. I will tell you, I do see a shifting. I'll be honest in my answer and tell you that I do. Obviously, anytime volume comes down, you're going to see repositioning of lending institutions are going to lean a little harder into their retail side. Probably and pull back a little bit from the wholesale side, because volume, when it's deflated, that's just naturally under a roof that has both divisions. You're going to see that kind of positioning occur. And I, for 21 years, worked for a company that had both of those things under a retail lending, but a wholesale side, because H&R Block Mortgage was the sister company to Option One, which I know a lot of people remember, and was one of the largest wholesalers in the nation. And so we were at all the, we were always together. We were really a company combined. Both were owned by H&R Block, by the way. So, I just think, I think that there's still a huge wholesale palette. I'm part of the brokers community, in a very large way. They're not slowing down. They're still creating a lot of I really think the second half, you'll see a little bit of that leveling out between the two. I think that last year there was a big, there was a, obviously everybody was starting to grow their wholesale channels just because the volume dictated it. So I just think, you might see a little bit of settling down this year of those two things, but I don't think it's going to get lopsided. I don't think one's going to beat the other right now. I just think you're going to watch these lenders watch where that flow of volume comes in and continues to watch it. I think the victors in all of this, the second half of the year, is going to be dictated by how well companies position their origination teams to actually fish with the right bait. Here's what's happening. There's lots of teams out there still trying to get first-time home buyers, and they're just piling them on. Now you got a guy that's got 100 pre-approvals sitting there waiting for realtors to get property. And you know what they're doing is a lot of them are trying to go to builders because they realize that we need inventory and they think building is going to be a solution to that. That would be like me handing you a teaspoon and saying, go shovel that mountain. Because that is not, in my opinion, the fastest route to the solution. The solution is going to come beyond the real estate, the realtor's hands. And let me tell you, I hate to say this, but realtors are great at servicing, but they are not great at marketing a lot of times in terms of cultivating from cold leads. So hear me out. I'm not saying they're not good marketers. I'm saying to go organically find cold leads, they're not the best. And we do that. That's a superpower for mortgage people. So we are perfectly positioned to rebate our lines. This is not about the well dried up or our fishing hole dried up. There are fish in that pond. The problem is we got a lot of LOs that are sitting there with the same, poles in the water and the same damn bait. They need to rebait their lines and pivot slightly. They don't need to leave the fishing hole. They need to rebait their lines. They need to go ask for people who are selling their homes. They need to bring those listings to realtors, and they need to start having a marketing conversation with the public about you're sitting on an asset that could be saving you money. Why? Call me today and I'll tell you how.
That's so good. And again, that's going back to opening up a conversation of value that is opening my mind as a homeowner to something that maybe I did not know. And boy, am I glad you called, and I'm not asking you what your rate is. I want to hear what you got to say.
Yeah, I would be stuffing envelopes that had I've made the guys here do a list of every reason a person will want to refi in 2021. With the top line saying, why would you refi for a higher interest rate? Well, I have 10 incredible reasons that would save you money. And here are and they need to stuff those envelopes and get those out. They need to do their CRMs with those, and they need to get that out on their social media. And you'll be amazed. The minute that pivot occurs and those LOs start to fish where the fish are, you're going to see this funnel just pick up speed immediately.
That's so good. Yeah, that I love that. So rebate, right?
You might get a rate and term. It's okay. If you throw the net out and you get last year's fish, great. But if you keep sitting there for rate and terms and your pole is baited that way, you're going to have all those other fish swimming around. And let me tell you, people are catching on to this. So the LOs that you're competing with, they're going to figure it out and you're going to lose those fish. So everybody's got to get there, and got to get there quick. Yeah.
That's awesome. So all these gold nuggets that a truthful and rightful category king and queen should have at their disposal. I hope you've been taking notes. What do you love? What have you learned? Drop it into the notes here, into the chat. So what can be the one focus? And maybe that's hard, right? But I do want to know, and we've got a few minutes left. What's the focus for the second half of the year, Christine? Like, what should we be really, truly putting our energy into?
Well, if I was an originator right now, I would be cleaning up everything that was disheveled for the last hurricane year we had. So I would be getting literally and I teach this in my blueprint for success, but I'd be clean slating my work area. I would re-examine all my tech stack. Whatever I was not efficient in, I would relearn. I would retake courses on it. I would increase the efficiencies of my CRM. I would just get myself in a place where I was prepared to really market myself and increase my volume through targeted marketing. Like we sat last year and we just, fish were jumping in the boat. And so our jobs last year were to get, the fish filleted or whatever. And this year we're sitting there and now we're waiting. And so I would just get focused on what I said before with the marketing, but get organized, take advantage of this time. Now's the perfect time to be doing educational things, to bettering yourself, advancing yourself, from a standpoint of go get your certifications that exist out there. And just really get yourself ready. Build your next 12 to 3-year business, 12-month to 3-year business plan. Where do you want to be in 3 years? What does it look like? I can tell you right now, if you don't know where you want to be in 3 years, then you are missing out on doing something right now this month that you should be doing in the reverse calculation of what needs to be done for what you want to be in 36 months from now. And so yeah, if you don't have that, you're already losing.
So, and I know, Christine, and I appreciate you sharing that in the perspective of, hey, if you're a loan officer, this is what if you're a producer, this is what you should be working on, right? And everything you talked about just now, as far as that focus, really has to do with recalculating, relearning, maybe what you missed on with regards to marketing and fishing. I love that. But for those that are marketing, and business development and sales director, like kind of that area, go out to your team and maybe in the same way that we want to add value to our borrowers, add value to your team and say, hey, let's put together a workshop. Right. And who can we learn how to do that from? I'm going to direct them back to you, Christine, as we close out here, because I know you not just what you gave here in the call, but what you do in business. How can people find you, learn more about you? Like what is it that that's the number one way that they can get in touch with you?
So, I mean, just any one of the social medias. I literally, our website is visionyoursuccess.net, visionyoursuccess.net. And there's a million.
You drop that in, Richard.
Yeah, that will come back to me. But you can find me everywhere. Some of the platforms have us. So like LinkedIn, I can't connect to anyone, but you can follow us. I hate saying that, but they cap out at 30,000. Instagram, I'm 2020 Vision. I'm capped out on Facebook, but you can join both Facebook groups, which is 2020 Vision for Success Coaching or Women with Vision. And can I just add a 1-minute tip for leaders and branch managers and executive leaders, if you're a regional or a business owner? Be wary this year in your recruiting and your business development of inflated W-2s when you're recruiting. What we would have paid for in 2019 for an originator, everybody's numbers are inflated last year. And so what you need to do is take 2020 out completely of your recruiting equation, go 2019 back 24 months and look at the percentage of purchase versus refi business, kind of look at 2 normalized years, now introduce the 2020 back into it, because it does matter if people are hardworking, their numbers went up and at least what you have in terms of work ethic from 2020, but you can't know what you have in terms of actual sales in 2020. So beware of writing the big checks for the big money that we would have 2019. You have to normalize your eyesight to that inflation point, and you have to really understand who you're hiring. Are you hiring a guy that was just really good at, bringing the fish that jumped into the boat out, or do you have a true salesperson there? And that's important.
That's so good. Yeah, that's a great reminder to do that. And again, that's awesome that you're a marketing person with a coaching business that knows their numbers. And again, I love you for that, Christine, and that. I also love Richard because he's the same with us, and that's, I think, what's made us so successful. Let's do this. I want you to share one last thing with us. Talk to me about a podcast that you've got that you've been working on.
Oh yeah. So we're coming out. I've been on Mortgage X podcast with Jason Frazier. That's still continuing, but we are coming out this fall, this September. You're going to be seeing a new podcast that is just me. It's called, and I laugh when I say it because it's called Beckwith Unplugged and Uncensored. And I laugh because I don't know that I can be more unplugged than I already am, or more uncensored than I am. I have a lot to say. And so I hope that I'm going to put some short, a lot of them are going to be monologued. So you're going to hear me like DJ disc jockeying a 15, 20 minute topic. It'll probably be market relative. It'll be industry relative. It'll be a nice nugget of something that matters to people in our industry. It'll probably be me with a no nonsense opinion. I'm going to weigh in on things that are happening in the news. We'll see how far my marketing team pushes me to have an opinion on maybe even controversial matters that appear in our marketplace. But I will be there, and I will probably have some special guests, and I hope that you'll come find us. If you follow us on social media, you'll know exactly where to find us for that. So
please follow Christine, and jump on the 2020 Vision for Success train. And hey, Christine, thank you so much. It's been such a pleasure. Listen, for anyone that wants to learn more about some of the strategies that we discussed on the call on this webinar, please visit us at salesboomerang.com. Thank you, Christine, for your time. And as always, it's been a pleasure. I'll see you on audio text messaging once more.
yeah,
You'll know who it is
thank you,
next time.
everyone. Good luck.
Be well, everyone. Take care. Thank you.